In this video, we are going to answer the question, what is price action trading? This is part of a series of videos aimed at beginners, teaching you how to trade using price action. Please hit the like button if you find the video useful and subscribe to be kept up to date on future videos. Okay, let's get started. When you come to trading as a retail trader, there are two main approaches. We have the fundamental approach and the technical approach. With the fundamental approach, the belief is that the underlying value of a stock or market can be determined using relevant data. Traders look at things like the state of the overall economy and specific market segments. They study company earnings, forecasts, assets and liabilities. They even study the management of companies. With the technical approach, the belief is that the fundamentals are already factored into the price of a market. They instead use price action charts to determine what a market will do next. So why do retail traders especially often lean toward technical price action trading? Retail traders have less access to key information than, say, a bank or hedge fund. We also get the information later, in most cases, than those banks or hedge funds. That can leave retail traders at a disadvantage. There is always more to study, meaning there are always more documents or financial figures that you could look at to give you a bigger picture. Large funds like banks and hedge funds have teams of people who look through and analyze it all. Retail traders do not. There is also the fact that there are always different interpretations of the same information. It can be difficult to determine if an earnings figure for a company is positive or negative. Think of how many hedge funds go bust. So we know the differences between fundamental trading and price action trading. Now, let's look at some of the core concepts of price action trading. One of the main ways price action traders attempt to predict future price movement is through the use of support and resistance. Support and resistance basically relies on the notion that areas where people bought or sold in the past are likely to be areas of interest again in the future. Any market, whether it be made up of two people or millions of people, simply represents buying and selling, and people tend to act in predictable ways. Imagine you bought a bunch of collectible cards for £1 each. You hold those cards and watch the value increase to £10. As the value increases, people are still buying them at £5, £6, £7, £8, £9, and even when it reaches £10. That is what is driving the price higher. The cards then suddenly plummet in value to £2. Over time, the value starts to increase once more. As the cards start pressing toward £10, what do you think is going to happen? People start to sell their investment. The price dropped from £10 last time, and they don't want to risk another fall. They decide to cash out of their trade. You also decide to sell some of your cards. We see this time and time again in financial markets, and it is called support and resistance. If price changes are significant, it often leaves clues for future important levels. Here we have a chart of the Euro-USD Forex pair. We see the market rising in price. And then there is a good amount of selling. Now look what happens as the market presses back up into similar levels. The market finds resistance. Sellers step in and the market falls over and over again. Think back to collecting cards. At this point, there is no confidence that the price of cards can continue to increase, and so there are more sellers than buyers. And here we can see the buyers stepping in. This is support. As the market falls, buyers find value here. They still believe that the price is going to continue increasing. Think of the price of your card dropping from £10 to £7. Buyers down here may think that the price is going to increase all the way to £15 and that they are getting a bargain. Now we are looking at GBP USD. Price increases and then the sellers step in. Now, as price reaches those levels in future, the market falls again, finding resistance. But look what happens when the market falls all the way back down to the initial level that caused all the buying. The market again finds support and the market increases in price. There are lots of ways price action traders analyze the markets, with support and resistance being a key component of most trading plans. The chart cannot lie. It always shows the areas where significant buying and selling occurred in the past. Because markets are driven primarily by people and emotion, this information can be used by price action traders. Now, usually people say, but it doesn't happen every time. Of course it doesn't. It comes down to the overall perceived value of a market at a given time. Price action traders use many clues, or their trading plan, to determine when to buy and sell. The candles themselves can also give clues. If we use a very simple concept, lots of buyers suggest more buying and lots of sellers suggest more selling, can that help? Now we are back on Euro USD. We have identified our level of resistance. The red candles simply represent a period of time when the market has fallen in price. The larger the red candle, the larger the price decline. Here we identify two strong selling candles. This suggests that the sellers are stepping in at the resistance level and gives a clue that price may fall again. As a price action trader, we would also think, okay, if I am wrong, when would I know? Perhaps it would be if price increased above the previous high price the market reached. Now we are back on GBP USD. We have our support level. And here we see big green candles. These show price increasing over a period of time, and the larger the green candle, the larger the price increase. These candles at our support level may suggest that support is holding again, and price is going to increase once more. If a trader is buying here, they also want to know when their trade would be wrong. Well, perhaps below the previous low at the support area. If the market falls below there, they can exit and accept the loss. It should be noted that this is a brief description of two important price action methods. However, there is a lot more to a typical trading plan. Hopefully, you can now answer the question, what is price action trading? If you enjoyed the video, please hit the like button. Subscribe to be kept up to date on future releases.